Hi, thank you for checking out Fieldman, Rolapp Associates Municipal Market Update for the week of November 29th, 2023. This is our 51st posting. Fieldman, Rolapp Associates is a municipal advisor to government. The Municipal Market Update, or sometimes called the MMU, is a posting that we do approximately monthly to give our clients and other industry participants some information on the municipal market. My name is Adam Bauer, and I serve as CEO and President of Fieldman, Rolapp Associates. And I'm also very active in serving municipal clients, both on helping them with their transactions and preparing to entering their bond sale into the municipal marketplace. Our first slide, what we do there is we combine three things into one slide. And if we break this down, what I'd like to start with are the green bars starting in March of 2022. And the key for this is on the vertical axis. Basis points, one basis point is equal to 0.01. And so that's what you, like I said, like you see there on the far right. And with those rate increases, you can see they began in March of 22. Then you can see a double increase, 50 basis points in May of 22, and then 4 75 basis point increases after that, or consecutively. And then hopefully what you're noticing there is it kind of tapers off after that. And recently we've had pauses or stagnant or no rate increases, whatever you want to call it. Each industry professional seems to have a different name or way of describing that, but it really has stayed constant. That yellow line directly correlates to those green bars. What the yellow line is it's the Fed funds rate. So anytime you see a green bar, that red line, or I'm sorry, that yellow line should increase. And so like you see March of 22 there, that first 25 basis point increase, it popped upward. And then we also added the 10-year US Treasury in there. The 10-year US Treasury, as I've described, and probably many others have, is just a key gauge that many in finance look to see generally where interest rates are going. And so we try to use that and want to compare it to the Fed funds overnight rate to see how those are interacting. Recently, you can see that the yellow line has been pretty flat, but the Treasury yield has actually declined. And I think if you listen to a lot of the folks on the financial news, there's a feeling that there's not going to be a lot more Fed funds rate increases, and we might even be in an environment where we see some declines. And so the US Treasury is anticipating some of that, or at least anticipating to not have a lot more Fed funds rate increases. So there's a lot on this chart. I think it tells quite the story, and we see how things have changed over time. On our next slide, what we're highlighting here is how the US Treasury yield curve has changed over time. If you've ever watched MMU, what I've talked about almost every episode is in 2021, when we saw and heard about inflation, it's called transitory. Something happened with that turn of the calendar in early 2022, that transitory gets dropped, and then we all started being very focused on inflation. We're probably feeling it at Christmas. And then, but that line for that is that blue line with green dots on it. And you can see it's much lower than where the US Treasury yield curve is today. And the other thing I think you'll notice is the shape looks a lot different. In January of 2022, you had a relatively flat, but an inverted yield curve, and that's more traditional. What we have today is an inverted yield curve for a portion of it, and then very flat going out after that. And so that's something that we'll continue to monitor. But before we turn the page on this slide, what I just want you to notice is the gap between those lines and just how much rates have gone up since January of 2022. It's quite a bit. Our next slide is to show you how this has changed over time. Now, when you look at this chart, it says a month, and then it says a 1 by it, the first day of that month. We're showing you the data for the prior month. So we're taking the data as of like December 1st, 2023. And what that means is that change happened in November of 2023. And so when we did the MMU in December of 2022, we had talked about how the FOMC chair had talked about rates being higher for longer but generally sending a message that we may not need to increase the overnight rate to the same degree that they had been. And the market reacted very positively to that. And in the month of November, we saw a decline of the MMD, the 30-year MMD, at 58 basis points. Just want to take a moment to make sure I define what MMD is. Municipal market data. And what this tries to, and it's for AAA, the best credit. And what this tries to do is if a AAA credit had a 30-year maturity that was tax exempt, where would it trade? And that's that middle column there. And then I want you to look at December 1st, 2023, and you'll see that November had a decline of 80 basis points. And so here we see, I think many see signs of inflation abating and things slowing down a bit. And there's a real sense that rates will not need to continue to go upward. And there's even talk on a lot of the news stations about in 2024, the Fed taking actions to decrease rates. And I think you're seeing that represented there. It'll be very interesting to see what happens going forward and how that 30-year MMD trades. And we'll give you an update soon on that. But if you're an issuer, November was a good month for you. And it helped set the stage for hopefully future months of rates just being lower than they would have otherwise been without the decline in November. This chart, what we showed here, are showing here, and we've shown this on every MMU we've ever recorded, and that is when we sell municipal bonds, you can sell a 1 year all the way to a 30-year in this example. And then what we show there is that blue bar represent the range of interest rates for each one of those maturities. And so that you can see they've been really low and they've been high. What that green line, though, represents is the MMD as of 11/1/2023. So we don't have that 80 basis points captured in like I showed you in the last chart. That was just updated for that one slide. And what you hopefully are noticing is that green line is near the top of the blue bars on the shorter term maturities, meaning it's elevated there. And then it's above average, but not scraping the top of those bars like it is on years 1, 2, and even 3. So that's where you see that inverted yield curve on the earlier maturities, is that it is elevated there. It's elevated other maturities, just not to the same degree. But this helps put in perspective, is even though rates feel like they're high, they're not outside the range of what we've seen in a relatively recent history. Give you a lot of summary data here of just how things have been trending for the year and other years. And we can cover this in more detail, but we have had a long MMU this month. So I'll just be brief here and provide the data. Now, 2 more slides. This is the flow of funds into municipal market bond funds. This is important because this is the demand for our municipal bonds that might be for sale. The green bars represent money flowing in. The yellow bars represent money flowing out. Now, you might say there's no demand for these bonds anymore, and that's going to be really bad, and rates should be even higher than they are. But let me show you another chart. On this chart, what we're showing is the weekly volume of bonds available. Now, like I said, November is a very good month, and it looks like a lot of issuers took advantage of that because we're over the 2023 average. That green and blue stripe bar there is the average, which actually is right on top of 2022. And you can see 3 of the 4 weeks were above that. So a lot of issuers likely saw the positive momentum in the marketplace and were able to get in and take advantage of that. But what I also hope you're noticing is that yellow line is over the green line. And that is, we have less volume than we had in 2021. So even though we don't have as many investors ready to buy bonds, we've seen outflows, we do have less volume. That otherwise rates would likely be even higher than they are now. So this chart, what we're showing here are some of the recent economic data points and ones that are coming up. Just like I said, like I've said in the past, if one of these comes in much different than expected, it could certainly have an impact on the municipal market and other markets. On the last page, we highlight the Fieldman Rolapp Registered Municipal Advisors. I encourage you to reach out to any one of these registered municipal advisors for more information. And I want to wish you happy holidays and thank you for checking out our MMU. To the extent you have any comments, questions, suggestions, we welcome those. we've worked in every suggestion provided to us. So thank you for those who have provided them. And, it's always nice to get a note from folks when they watch this. And we've always responded, like I said, and made updates along the way. So thank you for your time.